All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Thursday, everybody. Today is May 8th, 2025. And the top story this morning is a trade deal, or some semblance of a trade deal, a framework, a plan. We're cautiously optimistic that hopefully maybe someday we might have the meeting before the meeting. I don't know to what phase or extent this deal with the UK is going to be, but supposedly we've got something, an agreement. It's better than we were yesterday. And the market said, yay, it was a time of rejoicing. At 10 a.m. Eastern time this morning, President Trump is expected to make the announcement based on some information that is at the moment limited. We are seeing that CNN is reporting this morning that the 10% reciprocal tariffs will most likely remain after this deal. But the deal surrounds some of the other tariffs, in particular, the 25% tariffs on steel and autos. And in the flip side, some UK tariffs on agricultural products and possibly even some of their big digital taxes on big tech firms. So it looks like we've got something here. The market's celebrating. It's the first, hopefully, of many. The market kind of rallies on anything resembling optimism about the trade deals these days. And I think, to be honest with you, it's a little misguided. Talk to anybody in logistics, talk to anybody in small business, and they're all terrified. You know, they know something awful is on its way here, and the flip side, on the other side of the pond, something awful heading there. And yet the market just continues to grind higher just because some guy says something that sounds cautiously optimistic. The divorce between economic reality and what asset prices are doing just keeps getting worse and worse and worse. But at least we've got something today. Now, the other thing going on as far as the trade deals and negotiations, or whatever we're calling this thing we're doing with China over the weekend, the rhetoric has been just beyond ridiculous surrounding this meeting between Bissett and his Chinese counterparts. I'm really starting to get the feeling the whole point of agreeing to this meeting in Switzerland is just so the Chinese delegation can get up and walk out and blow up the whole meeting. I really think that's what we're being set up for. Both sides are signaling that they have no intention of even really talking here. President Trump said yesterday the 145% tariffs on China are here to stay. The Chinese Commerce Ministry is out saying the U.S. needs to show sincerity in order to talk. They need to rectify their wrongdoing. They need to cancel their tariffs, as if these are preconditions for even having this meeting. This meeting in Switzerland is not off to a good start, and it hasn't even started yet. So I don't really know what people are expecting here. I'm expecting something more akin to that blow up in the Oval Office between Trump and Vance and Zelensky. I really think that's what's brewing right now. And the market has now rallied several hundred points on this prospect here. I really just think it's misplaced. Look, I'd love to be wrong about this. Maybe we're all going to get together and, who knows, some light will shine down from heaven and everybody's going to be like, wow, we've really been a bunch of a-holes. Why don't we stop this whole getting ready for World War III thing? Why don't we stop stealing IP theft? And why don't we stop putting tariffs on everything? And maybe everything is going to be great. But then again, it is the 2020s, So there's that. We got that going for us. Yesterday, we had the Federal Reserve. And as I suspected, it was nothing. The FOMC was the least eventful FOMC meeting that I have ever seen. Jerome Powell pretty much planted his feet. He said, I'm doing nothing. I'm going to keep doing nothing. He did tacitly acknowledge that the risks of rising unemployment are increased and the risks of rising inflation are increased. But again, he was very adamant. The Fed is not going to act here. Meanwhile, the UK, the Bank of England, they acted this morning. A very surprising reaction, though. Wait till you see what's going on in the UK bond market on a rate cut. It doesn't make a lot of sense until you read about what happened and some of the details of this rate cut. The market is walking away from this with a very different reaction than you would think. That's pretty interesting here. Google stock took a big dive yesterday on this news with Apple. Apple has kind of accidentally or unintentionally announced that they are considering dropping Google search from Safari. This has been one of the fears about Google ever since AI and ChatGPT was released. A lot of people have been afraid that artificial intelligence was going to steal market share from Google search, which, although Alphabet is an AI company and one of the hyperscalers, search is their bread and butter. And so they're worried about cannibalizing their own business. But that is Apple's Google search and Safari is a very lucrative deal for Google. That may be going away soon based on some words from an Apple executive. And how he said it and where he said it was pretty interesting. It seems like that news kind of just slipped out inadvertently. Meanwhile, there's trouble at OPEC. Pay attention to what's going on in the oil market lately, guys. There's this story about Kazakhstan going out today. And ever since I did that interview with Doomberg last week, I've really been anything Saudi and oil related has just kind of been intensified, in my opinion. And what's happening here, what Kazakhstan is now saying after what the Saudis have said over the last couple of days, I really think OPEC's grip on the oil market is just falling apart. The cartel is disintegrating. Maybe that's a little bit excitable. We're a long way from that, but we are certainly heading down that road. And if that's true, that means oil prices are going lower, and they're going to stay there. That is absent World War III, of course. Remember, 2020s and all, that whole thing. What else do we have? Possible changes to the AI diffusion rule. We have NVIDIA stock was rallying yesterday on this announcement that President Trump may be easing off on some of President Biden's AI export controls it was one of his last acts of his administration, and those are set to go into effect on May 15th, just a week from now. President Trump may be dialing those back. So that is moving NVIDIA stock this morning. We got Restaurant Brands, which owns names like Popeyes, Burger King, Tim Horton, sorry, different Horton entirely. Their earnings, big miss on both sides. Consumers continue to be struggling. And Peloton, well, the only thing I can say about Peloton is he's dead, Jim. That stock just keeps getting worse. The quintessential COVID boom stock continues to bust several years running now. We got a lot to talk about once again this morning, so why don't we shrink my big melon of a head? And this is when I say, please hit that like button and that subscribe button for the YouTube algorithm. If you're new here, come on back tomorrow. Have your coffee with the melon heads. We do this one every single day. And right now, the market is positive off the highs of the morning, but still positive a little bit. We've been selling off a little bit here since 7 a.m. We had a big drop here at 8:30. That coincided with some of the labor data that came out. It wasn't that terrible. But right now, the S&P is about 40 points higher, about 0.7% for the time being. Who knows, by the time the opening bell rings, maybe this will be in the red. The Dow, meanwhile, is still higher by 200 points, or 0.5% higher, again, giving up those gains well off its highs from the morning. And the Nasdaq is leading the way higher, again, for the time being, 221 points, 1.1% higher. The Nasdaq appears to be benefiting most from these prospects of the trade deal with the UK because of those digital taxes possibly being included in the deal. Looking over at the U.S. dollar, we're a little bit higher this morning, 99.95, just shy of that 100 threshold here, higher by 4 basis points. The dollar has been bouncing a little bit since some of the panic of the strengthening of the Asian currencies sent it down as low as 98. Now we're threatening to retake that 100 level for the time being. The hysteria around the Asian currencies is quiet again this morning, so we'll be watching that one as always. Now, let's look at the bond market. First, the U.S., not a lot happening in the U.S. A little bit surprising considering the hawkish stubbornness of the Fed yesterday. I think maybe that was priced in. The market was all pretty much expecting that. There were no surprises yesterday. So we've got the 30-year Treasuries higher by 0.5 point here, 4.777. The 10 years at 4.285. That's higher by 1 point. The 2-year higher at 3.818. That's up 2.5. And the 1 month is at 4.284, down 1 basis point. But the interesting thing going on in the bond market this morning is this one. Look at the UK's yields. Now, they're a little bit off of their highs of the morning, but yields in the UK are up 6-7 basis points across the board. A couple of minutes ago, they were up 9-10 basis points across the board. And that's interesting because the Bank of England just cut rates this morning. So if the Bank of England is cutting rates, why are interest rates all rising? Well, let's talk about this one. In Market Watch, Bank of England lowers rates in unusual three-way split. The UK central bank's mixed messages surprised analysts. So it was a hawkish cut. Apparently, that is the takeaway here. The Bank of England on Thursday lowered its interest rates for the second time this year as the UK central bank responds to cooling inflation and signs of a slowing economy. The 5-4 decision to lower rates to 4.25 from 4.5, revealed ahead of the trade pact due to be announced with the U.S. and the U.K., comes not just against a backdrop of trade uncertainty, but also a month after a tax on employers was imposed. Now, unusually, 2 voters wanted half a point rate cut, and 2 other voters wanted no change at all. That really goes to show you that the scale of the uncertainty that exists among a key group, namely the actual settlers of policy, it's going to be difficult to make a call on future policy on the back of that, said Neil Burrell, Chief Investment Officer at Premier Mitten Investors. Financial markets took the split in a hawkish direction, as most had anticipated an 8-1 decision. The yield on the 2-year gilt had risen 7 basis points. And it's kind of interesting. The market wanted an 8-1 decision to cut rates. Instead, the market got a 7-2 decision to cut rates. And so the takeaway is hawkish, and interest rates rise when they actually lower rates. It just goes to show you how these central bankers, the immense power that these guys wield, just a little bit of modest dissension among the ranks about the direction of monetary policy, and the market just takes it and runs in a weird direction with it. So we're seeing interest rates in England are rising on a rate cut. It is the 2020s once again. Looking over at the commodities board this morning, we've got spot gold is a little bit lower here, $3,361. That's off by about $3 or 0.1% lower. Spot silver is actually a tick higher, $32.49. That's up by about 3 cents or 0.1%. I like the shinies. Copper is down by 1.2%. Platinum is up about 0.1%. Palladium is down 0.4%. And crude oil, WTI for June, is at $59.14. We've actually got oil is a little higher here this morning, $1 higher, up about 1.8%. That's interesting because I saw this article in Bloomberg this morning, and this goes to show you things are not well in Kazakhstan. Kazakhstan says it has no plans to cut oil production in May. Now, this is, you might be saying this is a little counterintuitive. Kazakhstan cut oil production? I thought OPEC was drastically increasing oil production. But you have to remember the backdrop. Yes, OPEC is set to drastically increase production again, but Kazakhstan has been one of those countries, the worst offender, that has been producing way more oil than their OPEC quota. They've been just ignoring what the cartel tells them they're supposed to produce and producing whatever they want. Remember, the power of OPEC as a cartel is their ability to limit production in order to control price. Well, if some of their biggest players are refusing to play nice in the sandbox, then OPEC doesn't really have that power, do they? Oh, and by the way, the United States is now the biggest producer of energy in the world. So how much control do they really have on prices? Less and less with every day. And now Kazakhstan, which has created tension within OPEC Plus by consistently breaching its production limit, has no plans to cut oil output in May, the country's energy ministry said. So they're going to keep producing too much oil. Central Asia's largest oil producer will pump a daily average of 277,000 metric tons of crude and condensate in May, the same level as April, and compared with 260,000 metric tons in March, the Astana-based energy ministry said by email. For 2 months in a row, the Organization of Petroleum Exporting Countries and its allies have agreed to make supersized production increases that surprised traders and drove down prices. The move was driven in large part by cartel leader Saudi Arabia's desire to punish member countries such as Kazakhstan that have consistently exceeded their production limits. The kingdom warned at its most recent meeting on May 3rd that there will be further output increases if the group's quota cheats don't fall in line. Kazakhstan's energy ministry on Tuesday said that it is considering its options for complying with its OPEC Plus obligations to cut production without giving further details. So yeah, we're considering our options. Your options are obey the quota or don't obey the quota. And look, don't threaten me with a good time. Disobey the quota by all means. OPEC is a cartel that rigs prices, and I hope they fall apart because it's, I don't think OPEC has helped the world in any way whatsoever. Access to cheap and abundant energy is the single biggest driver lifting human beings out of poverty. And OPEC has artificially maintained energy prices higher for decades now. So I think this is good for everybody. But it just goes to show you, man, the oil market, there are some big things happening in energy markets and geopolitics, not just Trump's trade war, not just China and Taiwan. Entire global power structures are shifting here. And this Kazakhstan, Saudi Arabia back and forth is a big part of that. Meanwhile, Bitcoin is having a good morning here as well. 99,316. That's up by about $2,000 from yesterday. I was looking around, guys. No big Bitcoin news. A lot of people have high hopes of this strategic Bitcoin reserve announcement that's due within the next week or so. But there wasn't really any big news here. This is maybe just piggybacking on this rally in tech stocks, pushing back to that all-important psychological 100,000 barrier. So Bitcoin looking pretty good here. All right, now let's talk real quick about this U.S.-UK trade deal. Trump touts full U.S.-UK trade pact in boost for Starmer after weeks of talks. A boost for Starmer? 'Tis not. Let me just put this way. This is just Bloomberg and their Trump goggles. Starmer campaigned on repairing relations between the UK and the European Union after Brexit. So cutting a deal with Donald Trump after he puts tariffs on the whole world is not going to ingratiate himself with the European Union, that's for sure. So Bloomberg calling this a boost for Starmer is kind of backward in my opinion. But President Trump said the U.S. had secured what he described as a comprehensive trade agreement with the U.K. It's not a comprehensive agreement. The culmination of weeks of talks between the two allies and marking the first of his promised deals with countries around the world. The U.S. president said in a post on his social media platform that Thursday would be an exciting day for the two nations, with the White House promising details in a press conference at 10 a.m. in Washington. Let's just talk a little bit about the particulars here, scrolling down through some of the back and forth. In exchange for U.S. tariff reductions, UK ministers had been considering lowering some agricultural tariffs while vowing to maintain food standards and reducing an £800 million, that's about $1.1 billion, digital services tax that largely falls on U.S. tech companies. Closer trade on technology and cooperation on artificial intelligence was also in the cards. So it seems like that's probably why the Nasdaq is leading the way higher this morning, or at least it's up more than the other stock indexes are, because it seems like big tech is the big beneficiary here of this deal with UK. Maybe some relief for American farmers. They did mention reducing agricultural tariffs there. The other thing I would note, they're talking about in exchange for reduction of U.S. tariffs. CNN is reporting this morning that the 10% reciprocal tariffs are going to stay. But it looks like the steel and auto tariffs is what the UK is really after. It's kind of interesting because the UK doesn't sell us all that much steel. They do sell some, but it seems like that's what they really want the tariffs cut down on, not so much the 10% reciprocal. So, it's not going to be a full and comprehensive deal. This is probably going to be a framework, like a memorandum of understanding or some kind of like agreement in principle. And then it will take literally months and months and months for the delegations to hash out the particulars, as is often the case. But at the very least, it's something. Now let's talk about the big nothing that I expect this China-U.S. meeting in Switzerland to be. China reiterates U.S. should cancel tariffs ahead of trade talks. The rhetoric between the U.S. and China directed at each other is not improving ahead of this meeting. If anything, it's further disintegrating, which is why I think this meeting is going to be a diplomatic CF as soon as this actually happens. Beijing reiterated its call for the U.S. to cancel unilateral tariffs on China, underscoring a standoff between the world's largest economies as they prepare for initial trade talks. The U.S. should be prepared to revoke punitive tariffs placed on China, Commerce Ministry spokesman He Yedong said at a regular press briefing Thursday. The U.S. needs to show sincerity to talk and be prepared to rectify its wrongdoing and cancel unilateral tariffs, he said. His reiteration of the Chinese stance came hours after President Trump said he was unwilling to lower levies on China, currently at 145% for most goods, in order to unlock more substantive negotiations with Beijing on trade. Both sides are outlining strong stances to maximize their negotiating positions ahead of their first trade talks this weekend in Switzerland. Those meetings will see Treasury Secretary Scott Bessent and Trade Representative Jameson Greer sit down with Chinese Vice Premier He Lifeng. So they're going to talk. The things they're saying for now, not really encouraging, not particularly optimistic. They're both trying to puff up their chests and act like big shots. I have very low expectations for this meeting. I think that's probably the key heading into the weekend here. Let's just hope we can get through this without a diplomatic CF. And then maybe we can talk about optimism down the road. But for now, the markets are just running with this news. Meanwhile, big news with Apple and Google yesterday. Apple eyes move to AI search, ending an era defined by Google. This was really big news. Google made a huge move on this yesterday. Apple is actively looking at revamping the Safari web browser on its devices to focus on AI-powered search engines, a seismic shift for the industry hastened by the potential end of a long-time partnership with Google. Eddie Q, Apple's senior vice president of services, made the disclosure Wednesday during his testimony in the U.S. Justice Department's lawsuit against Alphabet Inc. The heart of the dispute is the two companies' estimated $20 billion a year deal that makes Google the default offering for queries in Apple's browser. The case could force the tech giants to unwind the pact, upending how the iPhone and other devices have long operated. And the key thing here, guys, is what did I do? I clicked the thing. Here we go. Eddie Q. This is the sentence that really caught me. This is their senior vice president of services, Eddie Q. He's also one of Apple's big deal makers. You know, he's viewed as their big negotiator. And this wasn't a press release. This wasn't an announcement. It wasn't like an executive held a press conference and announced this. This was during testimony to the DOJ in an antitrust lawsuit. So this is kind of like an accidental disclosure, as Mish put it, or an inadvertent disclosure, right? This guy, Eddie Q, is under oath, so he has to tell the truth. And then they ask him a question, and it's like, well, crap, this isn't public information. It hasn't been disclosed to shareholders, but I got to say it anyway. And so the world finds out via testimony that this $20 billion a year deal is going away. And the reaction from Google was pretty strong, 7.5% down yesterday. At one point, it was down almost 10%. And we're talking about a $1.8 trillion company here, guys. So that's like $150 billion of market cap going up in smoke in seconds because of an accidental disclosure during testimony to the DOJ. So this was pretty bad news for Google shareholders. Google has been, or the big worry has been, that their AI business was going to cannibalize their search business, or in this case, Apple looking to move to AI for their search instead of Google. By the way, they mentioned a couple of times in that article that Perplexity AI was one of the companies Apple was looking at. And it's also worth noting, none of this stuff is official. This is just an executive who said a thing, but he did say it under oath. So there's that. Google recovering some of those losses here, up 2.5% ahead of the opening, though, $156.45 for Alphabet shares. And more AI news this morning, why NVIDIA investors are cheering Trump's likely dismantling of Biden's AI chip rules. We could, emphasis could, have some changes to this AI diffusion, these export controls that limit sales, aiming to keep them out of the hands of the Chinese here. Shares of NVIDIA climbed toward the end of trading on Wednesday after a report that the Trump administration is not planning to implement artificial intelligence rules controlling chip shipments that was introduced by the Biden administration. The AI diffusion rules, which have been slated to go into effect May 15th, are likely to be rescinded as President Trump develops his own semiconductor restrictions, though he's yet to make a final decision, Bloomberg reported. Meanwhile, Trump said on Wednesday that he's planning to announce a decision on making it easier to export chips to countries in the Middle East. Why the Middle East? That's interesting. Maybe this is part of a larger trade deal with the Saudis or the Emiratis. I don't know. We might be doing that. Yeah, Trump, who is preparing to travel to Saudi Arabia and other Gulf countries this week, next week he's traveling there. The Trump administration has reportedly considered pulling back on restricting sales of NVIDIA chips to the United Arab Emirates, according to Bloomberg. And guys, remember the UAE, Dubai, that was ground zero for those hyperscale Nexus crooks. The guys who were laundering money for the Kinahan cartel while smuggling chips into China, they were all based in the United Arab Emirates. So the fact that they're looking at easing the export restrictions into the UAE could be creating yet another avenue for circumventing those export controls that are designed to keep them out of China. So anyways, NVIDIA stock rallied on this news. It was up 3% yesterday. It's up another 1.5% this morning, $118.76. That is higher by another $1.70 this morning. Meanwhile, we got more signs of a struggling consumer here. Restaurant brands earnings miss as Burger King, Popeyes, and Tim Hortons post same-store sales declines. Further indication that people are eating out less because they just can't afford it. Restaurant Brands International on Thursday reported quarterly earnings and revenue that missed analysts' expectations as same-store sales of Popeyes, Burger King, and Tim Hortons declined. Shares of the company were roughly flat in pre-market trading. Restaurant Brands posted overall same-store sales growth of 0.1%, but its three largest brands saw same-store sales decline during the quarter and missed Wall Street's expectations. Other fast food companies have reported a rough start to the year as weather and a more cautious consumer weighed on demand for their burgers and nuggets. Tim Hortons, which accounts for more than 40% of Restaurant Brands' total quarterly revenue, reported that its same-store sales fell by 0.1%. The street was estimating growth of 1.4%. Burger King's same-store sales shrank by 1.3%, steeper than the 0.9% decline that was expected. And Popeyes, look at this one. Popeyes saw its same-store sales slide 4%, the biggest drop of the quarter. Wall Street was anticipating same-store sales declines of just 1.8%. And I can't believe that's true because Popeye's chicken is just freaking awesome. That stuff is amazing. 4% same-store sales decline. Guys, people can't afford to eat out, so they're not going to restaurants. We're seeing it. McDonald's, Wendy's, all of them reporting this. Now Burger King, Popeyes, Tim Hortons. Restaurant brand stock, though, it's holding up here. It's actually positive now by 13 cents, $68.02 a share. Look, the company's up a little bit for the year. Over the last year, it's down about 8.6%. So the stock's holding up pretty well considering this news. One company that is not holding up well, Peloton falls after posting a third straight sales decline. This company just won't die. It's kind of sad here. It's like that cockroach that's been on its back, kicking its legs back and forth for like 2 or 3 hours. You know it's coming. You just might as well just smush it and get it over with. Put him out of its misery. Peloton Interactive shares dropped in pre-market trading after reporting that revenue shrank 13% last quarter, marking the third straight year-over-year decline in sales. Revenue totaled $624 million in the fiscal third quarter, which ended March 31st. That beat Wall Street's estimates of $619 million, but it wasn't enough to convince investors that Peloton's new CEO's bid to turn around the company has fully taken root. CEO Peter Stern has been trying to whip the company into shape. You see what they did there? Whip them into shape. Since taking over in January, revenue has continued to decline, with sales from hardware such as its bikes and treadmills sliding 27% last quarter, and even revenue from app subscriptions dropping 4%. Peloton thrived during the pandemic lockdowns, but became mired in a deep sales slump post-lockdown. So look, you got a company, their hardware sales down 27%. These bikes are ridiculously expensive. That doesn't surprise me. But we're even seeing app subscription revenue dropping. That's surprising there. 4% decline in their subscription revenue. Peloton services pretty much very wealthy upscale clients. And to see them canceling app subscriptions is a little bit surprising. But Peloton stock is now down 11% now that the opening bell has rung. It's at $6.21, down another 75 cents this morning. Guys, look at a 5-year chart of Peloton. At the height of the pandemic in December of 2020, we'll say January of 2021, this stock was $171. It is now trading at just over $6. This is the quintessential COVID boom stock. And let's wrap up the show with some labor data, shall we? Initial jobless claims in the United States actually decreased modestly to 228,000 for the week ending May 3rd. So you may recall from last week, we had a very unexpected sharp rise in initial jobless claims to 241,000 last week. That kind of broke us out of this band that we've been in. So we're back down kind of closer to the range we were in before, but still the higher end of that range at 228,000. So people still losing their jobs at a relatively slow rate. It's not that alarming. The layoffs haven't been that bad this year, but the real weakness in the job market has been the continuing claims. Those who do lose their jobs struggling to find a new one. Continuing jobless claims in the U.S. actually decreased also to 1,879,000 or 1.879 million for the week ending April 26th. Now, that is a decline also from the prior week. We were at 1.91 million the week before, and that was our first time above. You can kind of see this high-end band that we were in. So we broke out of that level last week. We came back down to earth, 1.88 million now. Still the higher end of that prior band, down from the highs we saw last week. So the labor data, I wouldn't say it was good jobless data, but it was better than the awful data we got last week. It's a step in the right direction. I do think there is a lot of weakness in the labor market that's been hiding just under the hood there. You guys have seen every time we parse the data, every time we actually get into the nitty-gritty of these jobs reports, you can really see how there just isn't strength in the labor market, even though the Fed keeps repeating that myth. It just doesn't exist. And I just want to say thank you very much to Steve Woitis. What's going on, Steve? He says, are we seeing retail inventory shortage in imported goods yet? Walmart, Target, Dollarama, etc. No, we're not, Steve. Look, I saw this thing yesterday. It was on Twitter. Some nitwit posted a picture of empty shelves at the supermarket saying, oh my God, these tariffs are so irresponsible. There's not going to be anything to eat. These shortages are wreaking havoc on the poor and all this stuff because of tariffs. That you could see in this video that this idiot posted, if you looked at the glass, you could see the reflection of the coolers behind her that were completely fully stocked. And when she opened the doors to highlight the empty shelves, you could see in the reflection of the door glass the other adjacent freezers that were completely and fully stocked. What happened was she was just recording a rack that had been emptied for cleaning, as supermarkets often do. They take everything out periodically and they clean the shelves and then they put the stuff back in. And this nitwit goes into the store and records it to act like there's no food because we're all going to starve because of Trump's tariffs. Guys, food is the one thing that there's definitely not going to be shortages of. Even Craig Fuller from FreightWaves was saying the same thing. The U.S. is an incredibly food-secure country. Food, if anything, is going to get cheaper because of these tariffs, not more expensive, because all of the countries looking to retaliate on the United States are cutting back their imports of U.S. agricultural products, which is very bad for farmers, but will serve to lower prices here domestically. So there's no food shortages coming. That really ticked me off when I saw that quackery yesterday on Twitter. That being said, retail shortages are coming, but it's going to be in the consumer goods. It's going to be in the discretionary categories, right? Seasonal things. And based on my interview with Craig Fuller, it seems like back to school is going to be when it really hits. In the next couple of weeks, we're going to slowly start to notice some things more expensive, some things taking longer to get here, or some shortages of some things, but the real shortages won't hit until the summer. We're already starting to see the slowdown at the ports. It takes time for that to filter up the supply chain to the retail outlets. By back to school, if there's no change in these trade situations right now, then we will see severe shortages. And by Christmas, it's going to be a total CF, like worse than the 2021 shortages situation. So right now, no, certainly not food. Anybody who's talking about food shortages right now, just disregard them. That's just, it's just quackery. It's what it is. But yes, the shortages are coming. They will be severe. They will be worse than COVID, but not yet. That's the takeaway. It's going to take time. Thank you, Steve. Good question, sir. And thank you, Sami. Let me get this right. Sami Alkamash, did I say that right, Sami? Thank you for supporting the channel, sir. He says, hey, good morning to you and all fellow melon heads. Well, thank you so much for the generosity, for the super chat, for supporting the channel, and for the good vibes. Greeting all those other melon heads out there. Thank you very much, Sami. Appreciate the super chat and the support of the channel. Pigo's Trading Desk says, ironic, former empire first with fading power. Referring to the UK there. Look, the U.S. is no longer the sole global hegemon. I think that's pretty clear that while we don't really have any like abject peers, there are near peers, several where it hadn't even been close for like the last 20 or 30 years. So yeah, I do agree the US, our global hegemon status is in decline. The UK, yep, a former empire, absolutely. A little bit of irony there. That being said, honestly, I really think the only true risk of anybody replacing the US as a global hegemon is India. And that is a long way off, a long, long way off. India still has a growing population, and India has per capita GDP increasing. They're still nowhere near the US. But China's demographic collapse, China's economic collapse, China is not going to challenge the US for sole hegemon status. There may be conflict in the South China Sea, a regional conflict, but China is nowhere near being anywhere like projecting power across the world by sailing their big fleet and enforcing some kind of trade situation. They just don't have the ships or the tech to do that yet, and they're not even close. But that is accurate. The ironic first empire first with a fading power. Like the takeaway, everything is changing. The entire global order of things is changing, and you can see it even with that OPEC information. The oil cartel is breaking down. The dollar is slowly losing reserve currency status. Other countries are rising to become, say, mid-level global superpowers. A lot of things in flux these days. Pigo, thank you for supporting the channel, sir. Charles G, what's going on, Chuck? He says, I'm not eating fast food because I eat healthy. Well, Chuck, I can see, 2 tickets to the gun show, brother. I can see that in the corner there. Look, I freaking love fast food. I just can't eat it anymore. I mean, look, I would if I could. Trust me. Every time my girls have something like that, I get them nuggets. If they did good on a test or something, I'll take them and get them chicken nuggets as a treat to reward them. And I tell them, girls, enjoy this because you got a couple more years where you can eat this stuff without consequence. But when you get older and you have chicken nuggets, it becomes like you enjoy it for 5 minutes and then you pay for it for 3 freaking days. So congratulations, Chuck, on being a stronger willed person than I am when it comes to that stuff. Hats off to you, sir. It's time for Gamble to get back in the weight room. I know. Got to do it. But back injury's shitty like that. Anyways, thanks again, Charles G, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate that very much. Thank you guys for the generosity and the super chats, as well as you magnanimous Melonheads on Patreon and YouTube. You guys rock. Links down below to all that good stuff. Should you feel so inclined, don't forget that like button on the way out. M&J is always pushing that like counter. Keep that number going up, baby. Those are rookie numbers. You got to bump those up. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.